Hello and welcome back to Lagos FS. In this episode, I will teach you how to use another block to take your entries, be it in forex, be it in any financial institution. But before we go there, if this is your first time coming across my channel, kindly hit the subscription button so that you know whenever I drop new content. So let's go. What is another block? Another block is an institutional reference point where institution place a large volume of orders. Let me use illustration to explain these things to you. If you can see my cursor, let's go. So you can see other block. Basically, there are some features that you see before you consider another block a valid one. Number one is that it must be an area where a structure is broken or a change of character occur. Okay, what do I mean? Let's take this scenario. It's an uptrend. This market is moving up, creating this high and creating this low, and come back again to break above this high. Breaking this place means that a structure has been broken. Okay, when structure is broken this way, you expect price to pull back down to this zone, okay, before a continuational push to the uptrend. So this area of the market where price normally come back, especially in an uptrend, the last candle that traded before this movement started going up is that area that is normally called your order block. That last candle normally is a red candle. Okay, so you expect price to come back to this red candle before pushing up for a bullish trend. Then for a bearish trend, you can see the price has broken below this structure. Okay, and price normally will go back to this zone again where this other block is residing. Okay, when price come back to this other block, the price will continue moving down, showing that the bearish trend is still alive. So again, your other blocks must be unmitigated. These are things that you see and you know that your other block is valid. It must be unmitigated, meaning that price has not traded it before. Okay. Then another thing is that your other block will have a fair value gap. The other block that has fair value gap has the higher chances and better chances of respecting the trend. Okay. Now, the next thing is that your other block must be at the premium or a discount. If you are buying, it must be at the discount level, and if you are selling, it must be at the premium level. Let me explain what I mean by premium and discount. Let me use Fibonacci too. When this price movement occur, when this price movement move from this zone to this zone, you measure this entire movement from the swing low to the swing high. Okay, you can see it to the swing high. You stop. Now, from the middle of this Fibonacci 2, from the middle of here, this line at the middle is your 50% down to this zone where the other block is residing is here. From here to here is your 50% to your 100%. So you expect this price to fall back inside this zone. That what will mean that it must be inside your discount area if you are buying. And for selling, when bearish trend is happening, it must be inside your premium area. Okay, because you will only normally sell at your premium and buy at a discount. I hope this explanation is well. So let's go down to chart. Let me show you how you can identify this thing and trade it. So using 4-hour time frame, let's have a look now. I'll show you two examples using 4-hour time frame. Okay, so normally this price was moving up, moving up, moving up, creating higher, higher, higher low, creating higher, higher, higher low. Not until this thing move from this zone to this zone. Okay, changing character by closing below this higher low, changing character. So all you need to do is to just wait for price to go back to this zone where your other block is residing, and when price come back to this zone, you now take your entry. But note, you do not take your entry blindly. I will show you the entry confirmation now. Let me show you. The first you need to do is to highlight your other block. So let me highlight this other block now. The last ring high, the last green candle before this movement started falling down. Okay, this is the other block. Let's highlight it. Okay, So now that I have highlighted this other block, all you need to do now is to do what? This color is too much. Let me use another color. Now that you have highlighted this other block, the next thing we need to do now is to do what? Move down to 15 minutes. When we move down to 15 minutes, see what we expect to see in 15 minutes, okay? Watch closely. This is time for you to pay attention. Watch my cursor and see what I'm doing. You expect price to move in this format. I hope you are seeing my cursor now. In 15 minutes, this price movement, this pullback will be a bullish trend. You expect price to move in this direction, creating higher highs and creating higher low in this way, higher high and higher low. So when price touch our other block, we will expect price to do what? To break and change character by closing below this higher low. Once price close like this in 15 minutes or 5 minutes time frame, then it means that the 15 minutes time frame has aligned itself with the 4 hour time frame, okay, because overall we are looking for a bearish trend. So when this change of character happen, okay, we will now use one of the institutional reference point from this swing high to this swing low. It could be our other block, it could be our fair value gap. We will now use it to do what? To take our entry down to the start of the trend. So let's go to 15 minutes time frame. So this is 15 minutes time frame, and you can see in the 15 minutes time frame that this when price is going back, is moving in bullish direction. You can see it higher high, higher low, higher high, higher low, higher high, higher low, and market change character here. Let me show you so that you see it. Pay attention. This is the time to take the trade. This is the time you need to understand this strategy. This is our last higher low here, and price close below it. Price close below it. You can see causing a change of character. So when price close below it, all you need to do is to do what? To use out your fib level again. Bring out your fib and measure it from this swing high to the swing low. You can see it. So our trade will be inside this 50% from this zone to this zone, okay? And there's other block here. You can see other block here. So we can use this other block to take your trade. It's very simple. Just pay attention. That's the first other block we notice here, and it's inside the 15%. This green candle, you can see this green candle. That is our first order block. It's inside the 50% retracement. You use it to take your trade and your take profit. Let me show you. Your stop loss will be above this zone. Take your trade here above this zone that was created, and your take profit will be here where the trend starts. You can see it. This zone is your take profit. So this is how you can take your trade using order block. It's a two time frame show. You saw it, you see it in your 4 hour time frame. Then you move down to a lower time frame. You can use 5 minutes time frame, you can use 15 minutes time frame. So let's do the second example. Let's go back to 4 hour time frame. So this is our second example here. You can see that price break this zone, thereby causing a break of structure. So when price is moving back, we'll mark our other block. This green candle is our other block, not the small green candle, because this one is one that has a swing high. Okay, so we'll mark our other block, we'll highlight it. You can see immediately price comes there, price drop. We'll highlight this other block. Let me change this color. Let me make it yellow. So this place is our other block. So now let's go down to 15 minutes. Attention, this is time for you to learn these things once and for all. You can see that price move up like creating a higher high and come back to create a higher low. Try to push up again. It couldn't. And price break below it, causing a change of character. Let me bring this in so that you notice it, what I'll explain to you. Did you see it? That change of character occur here. You can see it. That was exactly what I taught you in the chart. See where the change of character occur, this place. this zone. So this other block is your entry position, this green candle. Let me highlight it. I hope you are seeing these candles. Let me make it bigger. I hope you are seeing it. That is your, that is place you place your order. This green candle now. In 15 minutes, and your entry will be like this. Stop loss above this zone and take profit where the trend starts. Where the trend starts. This is where this trend starts. And if you shift your this, you notice that the price literally went there future and take your profit. So basically this is how you take your trade using order block entry method. If this is your first time of coming to my channel and you like what you see, kindly hit that subscription button and put up the notification so that you know whenever I drop a new content. And we also have a free Telegram channels where I drop live threads one or twice every week. It is free. So find the link in the comment section and join our free Telegram channel. Your assignment is go and practice this thing. Give me feedback in the comment section. Let me know if you have any challenges. I'll come back to respond to you. See you guys in my next episode. Cheers.